This is Matt Russell, and welcome to the DailyFX Forum.
So I'd like to welcome everybody to the DailyFX Forum Highlights video. Let's get started and head to the forums. This is the Euro-Dollar thread, which I'm going to be reviewing for the next several minutes here. Mr. Pippin had a chart here on the Euro-Dollar, and I just wanted to highlight a few things here and there on the forum this evening. One thing here is just the fib levels here, and this is something you want to see at a 61.8 or any major fib level is candlestick confirmation. And when I'm watching a fib level, this is exactly what I want to see, and that's a candle wick heading beneath the fib level and then closing back above it. Now the reason is not because that means that the fib level is going to hold, while it does slightly increase the chance that it will. The reason is when prices leave behind that long wick, I now have a place to place my stop, if you will, and that would be a few pips beneath that candle wick. And again, that's what I like to see in terms of fib levels. And the most important thing, you know, the most important information you can gather from the market is a location where you can place your stop, or is a place where you can manage risk. And that's sort of the way you should view the market at all times. Not necessarily what's going to happen, what are you going to do here, but where is the most reward, and where's, you know, the most important thing, where's the least amount of risk. And so in a case like this, when prices come down, slightly pierce the 61.8, close back above it, that leaves behind an opportunity, not necessarily to make money, but to enter a trade where the risk is extremely defined and low in terms of, you know, quantitatively in terms of your risk. Moving forward now, or scrolling down actually, to some of the other things here. Here's Dollar CAD, pure player, asking a few questions here about the news and in terms of the third quarter GDP release and why you know, the euro dollar didn't move in the expected direction. Well, in my opinion, you're going to certainly have to get used to that. Oftentimes, the market will move in the opposite way of the anticipated direction, given the news. Now, it's my firm belief, and again, this is my personal opinion. There are many successful traders out there who use the news, use fundamental analysis in their trading. Me, I'm a very short-term trader. It's not really relevant to me. GDP, Mickey Mouse's birthday, it's all the same. It just doesn't really factor into my head. The only thing I really want to know about the news is what time is it, and if it's going to mess up my liquidity in terms of my short-term trade. Speaking of which, if I don't really trade the euro dollar, for the most part I trade the crosses, but if somebody was, you know, holding a gun to me to go trade the euro, which would certainly be an odd situation, and that mugger might need some more advanced training. Let's head to the charts, and I'll tell you exactly what I'm seeing right now. I also want to, the first thing I would do, let's say, you know, if I want to go find a trade on the euro actually, is I would go to dailyfx.com and read the current technicals. Usually I follow Jamie or certainly look at Joel, see what levels they're watching, and then I would go to the charts and see if I can sort of replicate or identify those levels, or find my own levels, if you will. So looking at Jamie here, reading through his analysis, essentially what he's saying is that, you know, he's very bearish longer term, but certainly in the short term there could be chances for upside, for a corrective rally. And the main point that Jamie is speaking about is, if we go ahead and this is a daily, but if we look at the shorter term charts, let's say the 60-minute here, prices went down obviously in an impulse wave, or for those not familiar with Elliott wave, just very fast and very dramatic, if you will. And now if prices have found at least a temporary bottom, although prices might continue lower, the corrective action should last longer than this action right here. That's essentially the key point, that if the trend has indeed changed, that's what should unfold moving forward. So on the hourly, I really don't see anything in terms of a trade setup, but let me go back to the daily actually and just show you the longer term level that I'm using, which would just be this very simple. I like to keep it very simple, this simple trend line moving here. So right now I'd have a bullish bias against this trend line, and certainly, you know, I'd place my stops beneath that trend line. But moving forward a little more, getting a little more in depth, looking at a 5-minute chart here, and again I'm a very short-term trader. Added this simple resistance line, and again, normally I usually don't trade the euro, but if somebody was holding a gun to my head, I just go ahead and trade the euro. I don't try to be a hero or anything like that. So moving forward here, I might wait for this 5-minute candle to close above this line, and then possibly look for an entry back on the opposite side of this line, maybe placing a 20 pip stop or so to the downside, and maybe trying to make 10 pips or so on the upside. And again, that's a short-term, very short-term trade setup. And the most important thing, obviously, is the risk is defined, and I'm going to exit, with that 20 pip loss, and that's the most amount of, most amount of pips, if you will, that I would risk on this trade. And if that does happen, then I just go ahead and look for the next trade. Again, my name is Matt Russell. Thank you for listening.